Hello everyone and welcome to this weekly technical outlook here at Extent.com. This week we're going to have a look at OPEC meeting, the US and the Eurozone inflation figures that are all coming up on Thursday. So starting from the OPEC meeting, which was scheduled for November 26th but has been postponed for this Thursday, which may be a sign that there are growing differences within the alliance for whether or not additional production cuts are necessary. So having a look at WTI crude oil, which is recording the fourth consecutive red day below the bearish crossover within the 20 and the 200 days SMAs, suggesting that more losses may be on cards. Also, the market is developing within this downward sloping channel, and if we are going to see a drop beneath the 72.30 support level, and more importantly below this area here of 68.50, then it may challenge the next support of 67.10. Alternatively, if there is a climb above this bearish crossover here, then it may hit the 80 level ahead of the 50-day SMA near 82.95 and the 83.60 resistance region. Looking now at the technical oscillators, the MACD is holding above its trigger line in the negative region, and the stochastic is moving lower, both suggesting that we may see more losses. Moving forward now, the US core PC inflation is forecasted to tick down, with predictions pointing to a drop in the annual rate from 3.7% to 3.5% in October. The dollar-yen pair now is holding beneath the 20 and the 50 days SMA, suggesting that these lines are very strong for traders, and we'll have to watch out. If the price continues to the downside, the next support is coming from 147.10 ahead of 148.80 and 144.40. To confirm that the outlook is negative, we have to wait to see a drop beneath the 200-day SMA near the 141.80 and also a drop beneath the 141.50 support. On the flip side now, if there is a climb above those lines here, then it may hit the 13-month peak of 141.90, and if the price continues to the upside, it will confirm the bullish structure, challenging the next psychological marks such as 152 and 153. Having a look at the RSI now, the indicator is pointing to the downside in the negative region, and the MACD dropped beneath its zero level, both indicating that the next movement may be to the downside. And coming to the end, a Eurozone's flash inflation figure for November is expected to slow down from 2.9% to 2.8% on Thursday as well. And euro-dollar now is currently testing the previous peak of the more than 3-month high of 1.0965, and if there is a rally above it, then it may hit 1.1065 and 1.1150, confirming this short-term upward movement from the 1.0450. On the other hand, now there is a drop beneath the 1.0850, then it may hit the 200-day SMA at 1.0810 before challenging the 20-day SMA at 1.0780 and the 1.0755 support. Now, if we're going to see a drop beneath this uptrend line here, then the outlook it will change to bearish, meeting the 1.0520 and this previous bottom here of 1.0450. Now, the technical in the oscillators are suggesting that the market may be to an overbought territory, as the RSI is ready to cross above the 70 level, and the MACD is holding well above its zero line and above its trigger line. So we may see a bearish correction in the price before it continues to the upside again. So that's all from me. Thank you for watching and have a great day.